Hello and welcome to Boom, Doom and Zoom. I'm Paul Rickard and of course I'm joined by Peter Switzer. How are you, Peter?
Hi, Paul. How are you going? Hello, everybody.
Pretty well. Looking forward to coming out of lockdown, which is
Yeah.
Freedom Day in New South Wales on Monday. Is that right?
Correct. I'll see you at the pub, Paul.
Yeah, okay. We're going to start. I thought we might just start talking about A2 milk because it's a stock that has disappointed. We've both been on it. Yesterday we got news, or Monday or Tuesday news about a class action. You've actually been speaking to the lawyer involved in the class action, Peter.
That's right, and she'll be on the Switzer investing TV program tonight. I talked to her yesterday, and basically their argument is that while A2 Milk tried to blame the coronavirus for their problems, in actual fact, they were not completely forthcoming about their inventory problems that were there before the coronavirus. And so they believe that the company has misled investors, and any investor who got in, and I think the time period, you have to check with the TV show. I think it runs between something like May and August or something like that. If you were a buyer over that period of time, you can join the action. And it doesn't look like it's going to cost you anything to be a part of it. Paul, have you ever joined a class action against a company?
I haven't, Peter. Look, I have, as a director, seen class actions or threats of class actions. Typically, I'm not a huge fan of them, and I'm not a huge fan of the lawyers that get involved because they, those that get lodged do tend to get settled. They rarely go to court, and they do tend to get settled sort of almost coincidentally around about the insurance levels that the company carries.
No, funny that.
And funny, a lot of the money ends up in the hands of the lawyers. So, I'd be interested to know what they've got to say. Just before I go on, Peter, might just mention to Andre, I don't know if we forgot Andre to send out a reminder, but we don't have too many attendees, which suggests that a lot of our listeners may not know we're on. So I'm just wondering whether you might want to send out that reminder now, but otherwise, the small number of you have joined us, you can get asked lots of questions, right? So,
well, I'll go to stick.
Come back to A2, Peter.
Yeah, I do have a sneaking suspicion I saw an alert coming through, but it may well only come through only a short time ago. So I think the important point is this, that if you feel as though you've been sold the dummy by the company, Slater and Gordon think they've got a pretty strong case against the company. The company, of course, has come out and said they're going to defend it vigorously, which I think is the standard thing that they say. But it is a curious one, Paul, and I must admit I wouldn't like to be accused of misleading the market.
Yeah, sorry about my phone going off to those people. I will call you. Sorry, I just had one of those days. Anyhow, I didn't put it on silent, so it just happens. Okay, so just the other one I want to talk about, Peter, was so we'll see that tonight on tonight's Switzer show. It's just about the banks and APRA. Not long overdue, I guess, increasing the buffer from 2.5% to 3%, also threatening that they will do more if needed to, just make, I guess, probably introduce a bit of a mini credit squeeze to slow the whole housing market down. That's sort of what they're saying, isn't it?
Yeah. And what they're hoping to do is just reduce the number of people who turn up to auctions and open houses on the basis they can't really get the money. So they want the bank's computers to effectively say no when people apply, and they're in a very extended situation in terms of what they're borrowing. And I think it's probably a wise thing to do, given the fact that the Reserve Bank has basically said, well, we're not going to raise interest rates until 2024. And they basically restated that this week, Paul, when the RBA made its decision on rates. And so APRA, it's the only one that really can actually tell the banks to control the supply of loans going to the market. Interestingly, I never thought that the rise in bank share prices had been, driven by the fact that they're making a lot of money out of these loans. I always, and they probably are, but banks make a lot more money, Paul, don't they? You've been a banker in your time, when interest rates are rising.
Yeah.
And to my way of thinking, there's kind of an implied, there's an implication there that, to me, that the Reserve Bank will have to move well before 2024. And that's why APRA is saying, make sure your borrowers can handle a loan that goes to 5%. They might borrow at 2, but they're going to have to be able to cover at 5, because APRA must think that interest rates are going to rise over that period of time as well.
Yeah. Look, I don't think it means too much. I think the danger of this, and people, if you remember, we actually had a bit of a mini credit squeeze in the 2019 when APRA tried to do this before.
Yeah, started in 17, extended to 2000.
Yeah, and it did things like, they made interest-only loans almost impossible to get because that was limited to 30%. They changed the servicing ratio. They changed the test around expenses, right? What was counted as an eligible expenses? Remember Westpac and the battle over that.
Investor loans were basically made so hard. Yep.
Yeah, so it was never called a credit squeeze by the press, but it was. It was very hard to get finance for a period of about 6 to 9 months. It turned out to be. It took a long time to phase in, but when it hit, it was really difficult. And then they loosened the reins off just after the COVID crash in 2020. So, like, if it gets a little tougher, it'll stop the home market in its tracks a little bit. I guess the impact for bank shares, if we just go to CBA, is that, it just makes it a little harder to grow revenue if they're not writing as many loans. And that's probably why CBA came off a little bit yesterday. It's been supported by the buyback, people buying back. And I think what you're seeing today, Peter, and I'll write about this in the weekend, is now a lot of people realise the CBA is so expensive compared to the NAB and Westpac. And so today you've got CBA being sold, and Westpac or NAB, if you look at that, it's up over 1%. So there's a lot of people starting to switch their monies back into those other banks.
You're signing information again. I'll request an email.
So I just got someone there on who's not on mute, but anyhow. So let's go to a couple of questions.
Sure.
So this actually is related from James. Says, do you think there will be a real estate increase in demand, and do you think there will be a real estate increase in demand and under supply in 2020 with internationals returning? So that's the other thing, we've had this home boom despite there's really no international participation, Peter.
Yeah, look, I think what we're going to see once lockdown is over in Sydney and in Melbourne, I think we're going to see an increase in the supply of properties on the market, Paul. So that's going to, and I've interviewed Charles Tarby, who's the founder of Century 21. He's got about 350 offices around the country. And he's been alerting me to this for about the last 6 weeks, that they're progressively seeing more and more properties being lined up to come onto the market in November and December. And so if you add the APRA thing to the supply, because people just weren't happy to put the house on the market when they couldn't get a proper showing, people couldn't come in and see it physically and whatever. I think we're going to see that happening. So that will make up for the lack of international buyers. But I guess the bottom line also is, Paul, in 2022, why wouldn't international buyers still be a possibility online?
Yeah, I mean, I guess that's possible, Peter. So I think though if we do get a big reopening of the borders, and so we'll get, we should get more impetus for that market. So that could be while we've talked about APRA's controls, we really haven't had a lot of international participation. Not maybe at the top end that's continued, but not at the middle and bottom end. Right. And we could certainly see that come back again.
Yeah, I did notice during the week that Star Entertainment put out a report or a review that they believe that the foreign, particularly the Chinese tourists, will come back by the middle of 2022. So I reckon if we're seeing Chinese tourists, we'll see Chinese students as well. That's provided that Beijing doesn't, make it hard for them to do it. But at this point in time, Star Entertainment believes that the Chinese tourists will be back in 2022.
Okay, this question from Keith. He's talking about WLS, which is the WCM Long Short Fund, and he says a NTA before tax of about 84 cents, closing share price of 68.5, so it's trading at a massive discount. Size about $32 million. Is this small market cap the reason for the large discount? So we know a little bit about this, Peter. Do you want to comment on WLS? That's also the code you see.
I just think that, Paul, you're much better at explaining these sorts of things than me. And so what's your view? I'll toss it to you.
Well, I think it probably does explain why it's trading at a big discount. And I think there are some plans that the manager has to grow that, and they'll be being, talked about publicly shortly. But at the moment, when you get such a small listed investment company, it's really uneconomic at its current size. And I think there are some plans to come shortly that'll change that quite drastically. But that probably explains the very large discount. If you're a brave, punter, when something is worth 84 cents and you can buy it at 68.5 cents, you've got to say there's probably some value there.
Yeah, and there's some pretty well-known fund managers, Paul, who always say they like to buy $1 for 80 cents. So in this case, you're buying 84 for 60-something cents, aren't you?
Yeah. Okay. This question from James, it's about what do you think about HLO? Now, that's a code that I'm just going to think what HLO is for a second.
I do know.
The old Hello World. Okay, of course.
Yeah. It wasn't long ago. It was either Julia Lee. It could have been Julia, I think, actually quite liked Hello World. I don't think the analysts are over the moon about Hello World. I will check that while we're speaking, Paul. It's clearly a travel agency. It should benefit from getting back to normalcy when it comes to traveling around the world. But at this point in time, I think I've checked it out recently. The analysts aren't going wild on it, but it may well be definitely a sleeper that should do well in reopening.
Yeah, I mean, look, I think we did this about 3 weeks ago, Peter, or 4 weeks ago, all the travel stocks, and we actually thought there was more upside in all of them, despite their early rallies, because the reopening is going to be pretty quick, and I think that's what you're seeing with Hello World. I think about $3 where it got to is about pretty much where the analysts thought it topped it out at, from memory. So it's not surprised it's pulled back. We might just have a look at Qantas while we're there, because that's the one I liked as the purest way to play the whole reopening trade. I think it had a big rally and just pulled back a little bit. So Qantas QAN, if we can just have a look at Qantas. Yeah, 561 of 62, got up to about 575 last week. I think that's got more on it, Peter. What do you?
Yeah, Hello World, they got 19% downside, so they really got a negative on the company. Qantas, I wrote a story this week, so I do recall that they are still pretty popular with the analysts, even though it's gone for a good run. I think the important point about Qantas is that it doesn't have as much competition locally as it used to have. I think when John Bulgetti was running Virgin, he was really attacking the business, and they make a lot of money out of that. The analysts think 6% upside for Qantas, and there are others with even bigger outlook. So I think you're right. I'd rather play this sector with a quality performer like Qantas. But if you want to, take the punt, Hello World may well be a surprise, but it might need the total opening up of borders before it can actually write a lot of business.
Yeah, the big change for Qantas needs as well, Peter, of course, is the home quarantine thing. New South Wales is talking about home quarantine of 7 days. Some of the other states are still at 14 days. There's some comments, I think, from Joyce, they'd like it get down to 3 days or 72 hours or even less and then abolish it. I mean, you're not really going to get a lot of business travellers until you get rid of that, and you won't get a lot of tourists.
Yeah.
Yeah, you might get. I know I've booked to go overseas already, Peter, but you know, well, the other half is booked to go overseas. So a lot of people from Australia want to go and see relatives and family overseas, but you know, whether people are yet prepared to go for short-term, you know, tourism trips when they've got a 7 days home quarantine is probably too much. So to get that whole sector really going, they've got to find a better way through that. So that's probably
that's part of the reason why Hello World's not doing all that well, because it is a pure tourist play. Interesting, Paul. Last night in the US, the stocks that were doing well were particularly the leisure-related businesses, holidays, as opposed to the business ones. And you're right. While there are problems around quarantining and that sort of stuff, it will hold back the sector. But all my investments in this sector have been based on the idea I thought I would make money by the middle of next year. It's come earlier than I expected, but I think there's still going to be plenty of upside in 2022 with these travel stocks.
If you've got any questions, I'll come to them. I've got a couple here, but you know, if you've got any questions, send them through now. Okay, here's a question from Jane about Appen. You wrote about that the other day, Peter. It continues to soften a little bit. She says, do you think Appen's in the buy zone?
Well, look, I do, and I'm really disappointed with the way it's gone. The analysts still think Appen has 56% upside, and I think you have to go in your eyes open with Appen. Fantastic company, and had lots of really good customers, big end of town, Google, Amazon, and all that sort of stuff, Facebook. Now, there is a feeling out there that these bigger companies may well try to do what Appen did for themselves. And that's the big question mark. To what extent are these companies committed to taking on the artificial intelligence and machine learning activities of Appen? And the market doesn't know. And so the market's kind of very hesitant about it. I think the story around Appen will unfold over the next 6 months, I'd say, as America gets close to normal, Europe gets back to normal as well. And that's a more fun story. But in a sense, we're flying blind. You look at their previous share price, Paul, you think they've got plenty of upside. Even if it only went to half of where it was in the past, it'd be a nice gain from where it is now. So yes, it's in the buy zone, but it's not like buying CBA at $60. It's not like buying Qantas at $4. This is a trickier one because there's question marks over the significant customers that explain why the share price was high, before the coronavirus.
Okay, question here from Ian. Hi guys, what do you think about Regal, which is the code is RF1? I think that's a listed investment company. Sorry, that's a funds management company. So Regal Investments Fund. Yeah. Look, I might have to take that on notice, Ian. I'm just can't access whether that's the fund manager
it's not covered by the analysts here. Yashika, can you put down RF1? We'll ask some of our experts on Monday night show if they know anything about the company.
Okay. A question here from Shabir. You've gone for the triple whammy. We might not do all these stocks, but thoughts on REA, Wesfarmers, and Xero for the long term. I think they're all long-term stocks, Pete, don't you?
Every one of them are great stocks. When will be the best time to buy them? When the market has a big shakeout. But I think they're all going to be long-term holds. If I was constructing a portfolio for somebody right now, I'd be happy to have all three in those portfolios. Paul?
Yeah, I have no concerns about Wesfarmers. I mean, REA, let's have a look at REA if we could just look at that one. It's pulled back a little bit. It's sort of occasionally gets caught up into the tech thing. But you got to say, I guess that the news yesterday on APRA is probably bad for REA because if borrowers find it harder to get finance, maybe listings will slow down a little bit. And so that's probably a negative for REA. Xero, it's come down a fair bit. It's come back from the mid 150s to the 130s type level. Let's have a look at Xero, which is XRO. You think that's buying territory for Zero, Pete? I mean, it's had a great run. We got down to about $110 briefly a few months ago. It's sort of on that chart, you know, you might just wait a little longer. What do you think? I mean, I think it's a portfolio stock. Is it a trading stock at $133?
Look, Xavier, probably you would say, because at the moment Wall Street is not certain about whether it wants to dump or buy tech stocks. We saw on early in the week they were dumping. Now that last night they were buying, and Zero does get pulled up in all of that. I also think that, you know, Zero is a company you want to hold for the long term. In a perfect world, if you saw 110, you'd fly into Zero. But I think, yeah, it's a good company. Whether you buy now it drops, I would say in a year's time, this is going to be closer to $200 than $100 in a year's time.
Okay, question here from Dale. What view on Lend-Lease? Not doing a lot Lend-Lease, it's just drifting down. Let's have a look at LLC.
You've been a Lend-Lease fan, Paul.
Yeah, I sort of like the idea of what it's trying to do, but new CEO, I don't know, it really hasn't done a lot in the last 12 months. In fact, just continue to ease back a touch. So it seems to have support around about, 10-ish, just whenever it gets below 10, it bounces, but there's not a lot to inspire you. I like its strategy, or I liked what it was trying to do long term, but it's been very impacted by COVID, and it's taking a while to win back market confidence. So
analysts
sort of in the
percent upside, Paul. And I think if you don't hold Lend-Lease, it's probably a good long-term hold. Coronavirus hasn't been good for the company. You can see where its share price was. And I just think that it's just going to need some time. Like a lot of the office blocks that they own in Sydney and Melbourne have been affected by lockdown, the fact that workers aren't going back to offices at the moment. But one day that will change, and that's when the market will have a different view on Lend-Lease. And you make the point, Paul, that they are trying to get into those multifunctional developments, aren't they? Where you've got residential and retail and even possibly office all intermixed.
Yeah. Okay. Mark's got a question. How do you see the evolution of Vulcan Energy? I thought that's
nice turn of phrase there.
It is an interesting turn of phrase. I'm not sure what you mean by the evolution of Vulcan Energy, but you got any thoughts on that? Maybe we might need to take that as a little bit on notice too.
Analysts don't cover it, so I'm going to have to go to the brokers and the fund managers who may well run their eye over a company like Vulcan Energy. I'm not sure, Paul.
Okay. Next question from Peter. What do you make of CFK's, which is Collins Food, CFK's announcement and future share price level? Is it a buy?
CFK is or Collins is certainly a surprise packet. It continues to do well, and it's kind of priced to perfection according to the analysts, 0.2% upside. Can we see the chart? Yeah, all right.
Collins Food, of course, they own the franchise, most of the franchises for Pizza Hut and KFC and
Sizzler was one they had.
Sizzler, I think KFC is
the
main brand. Yeah.
As I say, they've been a surprise package. I thought that they would struggle with KFC, and the fact that Sizzler, I think, only operates in Queensland. But they're pretty good at what they do. You can see there that their share price has done pretty well. Okay, I'll throw that to the brokers as well to see if they see some potential for Collins Food.
Okay, David's got a question on BWX. I think that's also the stock code from memory. It's an interesting company, BWX. You might get the graph on that.
Paul?
Sorry?
What do you know about BWX?
Not a company I follow very closely. Let's just have a look at BWX if we can. I didn't know that it hadn't kept track of that to see that was down at that $4.60 level. What do the brokers say, Pete?
Yeah, 17% upside for BWX.
To what price?
Target price will be $5.51.
Yeah. That might be another one to take on notice, I think.
Yeah. No, I'm sure a lot of people are interested in BWX. Yeah.
Okay. This is from Anonymous. Thanks for the great show. Thoughts on Goodman Group, GMG. It's super expensive, Goodman Group, which is probably why it's pulled back a little bit. Let's just have a good Goodman Group.
Yeah.
GMG. I reckon it's a great long-term portfolio stock. The question is, it's very low yielding, and it's had such a great run in the pandemic, mainly because of the it's very heavily focused on industrial property, not just in Australia. It's actually a global property company, and industrial logistics, and that became all the vogue because we all learned to buy things online, and industrial warehouses have become very, very fashionable.
Yeah. Sheikha, can we see the 2-year chart?
Well, the 3-year chart, I think you'll find it's run up the whole way.
Yeah. So where we were before the coronavirus, we're talking around a $16 stock, and it's now $21.18. And I think we're probably getting into a pretty good buy zone for a company, as you made the point, Paul, is a good portfolio stock. These sorts of companies, they are, well, I think, perpetual rises over time. And sure, it may well go down to $20 or $19 and you might get in early. But in a year's time, and in 5 years' time, you'll be saying, yeah, terrific, what a great buy that was. And I think you say the same with Xero. 5 years ago, Xero was a $14 stock. 5 years ago, well, maybe 10 years ago, CBA was a $40 stock. These are the sort of companies you want to be in over time because, as you made the point, Paul, it's in the space for buying online. It's fulfillment, and fulfillment's just going to get bigger and bigger and bigger online because that's where the world's heading.
Yeah, and it does it very well, Pete. And so, I wouldn't be selling out at that level. It's a stock to earmark to buy at the right time. It just got too expensive, I think, is probably why you've seen a bit of a pullback.
Yeah.
Okay, Peter's come back with a correction, CKF, not Collins Food. So he's corrected that to CKF, which I have to look at what that is. I just don't know that code up front. CKF, we can get that up, Yushika. Okay, no, this is Collins Food. Okay, all right. So I'm not sure what the issue is, right? So we had the right company, wrong code, I think, on that one. Okay, Judy's got her hand up. Can we see if we can unmute Judy, and we'll get you to speak your question, Judy. You should be able to go ahead now, Judy. Okay, I don't think we're getting anything from Judy. Okay, all right. And then another question here from Anonymous, a question about Iris, which is IRE. Now they've had a suitor that got pretty close to launched an indicative bid, has pulled out, and that's why the share price has come back. So it's come back pretty well close to, not quite to where it was before the bid. I think when you look at that graph, the first offer was around about when it was trading in the 10s and took it up to in the 13s, close to 13. And then you had another bid that took it to the 15s, and then they pulled back, and now we're sort of about 11. Just thoughts on Iris, Pete? Does it just go back to where it was?
Yeah, I think it's an interesting stock. Well, I hadn't thought about Iris's current share price. I'm definitely going to get my experts to talk about this on Monday night. $11.34. This could be a good buying opportunity. I don't know. I kind of like the company, and I like the fact that someone did want to take them over, and the share price was got up to $15. Now $11.34. It could be a very interesting one to have a bit of a look at. And by the way, the analysts think 24% upside. So the analysts like the company at this price level.
Okay, I think, and then the last question that we'll pick up today, Pete, because we're just running short on time, is from Jay. I don't know what the full name is, but how do you think Kogan shares will fare as we open up? So KGN for Kogan.
Kogan.
Got up to over $20. It's back under about 9-ish, I think, at the moment. Let's have Kogan. Yeah, it got up. What was the high it got to? I just can't see that. It got up to $23 or something. What's your view on Kogan, Pete?
You know, Kogan, so the analysts think there's 45% upside for Kogan. And because it's in the right space, it's an online seller, you think that the future should be good for Kogan. But they have shocked the market, haven't they, Paul? They've made announcements that have really annoyed the market at times. They're also competing against, Harvey Norman, JB Hi-Fi, Amazon. So there's a lot of competition out there as well. So look, probably at these levels, and given the fact that analysts see 45% upside, this is probably the right time to buy in. But whether you think this company's going to rebound up to the 20s again, I don't know.
I don't think we're going to see in the 20s. I mean, the thing that worried me about Kogan is twofold. One is, what's their long-term competitive advantage? When you think about the competition there, it's not, there's a lot of people selling online, and if, okay, first in, get the land share with customers, but a lot of people in that space, including, your giants like Amazon and some other very well-known brands. And then secondly, there's always been some concerns about their corporate governance, right? And that's probably part of the reason for the share price fall, because, be careful what I say here, Peter, but, it's got a fairly, the founder, is an interesting character, I think, is probably the best way to describe
he's
it.
He's an entrepreneur, Paul, and a lot of entrepreneurs can start businesses, but they're not really well received by the public listing market. And they often find fault with the way that an entrepreneur wants to run the company. And at times, they've made decisions that the market hasn't liked, and they mark them down. But look, potentially, he's probably even a takeover target. But at this point in time, I just think he's probably a buy at these levels, but I wouldn't be expecting massive rises. It's a speculative play from my way of thinking.
Okay. All right. We're out of time. We do like to keep these to exactly half an hour every Thursday. We'll be back next Thursday at 12 p.m. Eastern Standard, the summertime. Peter, thanks for joining us. And we'll Switzer report out this afternoon. You'll be back on the weekend anyhow with an update on the market. And let's hope that Deborah has a good investing week, and we'll talk to you next week. Thanks for joining us. Good afternoon.